Well, hello and welcome to this video in the series where we're looking at the quantum trading indicators. And in this one, we're focused on the VRSI indicator, the volume relative strength indicator. And I hope by now you've been able to watch the introductory video, which explains the concepts, the ideas, and the reasons why we developed this particular indicator, very much as a complementary one to our volume price analysis methodology. Now, in the introductory video, we just simply looked at one chart in the 10-minute time frame, and we looked at 7 stocks. And for continuity, I'm going to carry on with those 7 stocks once again. We've got Caterpillar, Honeywell, Apple, Amazon, Tesla, Johnson & Johnson, and Walgreen Boots. So we're going to use those 7 again. The difference here is, as you can see, we've moved to a multiple chart array. And I've split out the volume from the VRSI, which is on the top line. So we've got a 5-minute, 10-minute, and a 15-minute across the top. And down at the bottom, we've got exactly the same time frames. They are both interval linked and also stock linked as well. So down at the bottom, we've got the 5-minute, the 10-minute, and the 15-minute, but we've just got the volume because I think it makes it very clear when we look at the two charts the relationship between the two and how important it is that we use our analysis for our volume analysis. And really what the VRSI indicator is doing is helping us. And if you've watched the introductory video, you'll know it's all about pressure. We use the word pressure a lot when talking about this indicator because it is the pressure that is being applied to the particular trend, or when we're in congestion, a lack of pressure, if you like, as well. So that's how we refer to the indicator. And as I explained in the introduction, a lot of the principles that we apply to our volume price analysis methodology, for example, rising price, we want to see rising volume. Well, in a similar way with the VRSI, we want to see rising pressure in precisely that way. And similarly, when we see a market that's falling, when we have a stock that's falling or whatever the market we're trading, we want to see rising volume there as well. And once again, with the VRSI, we want to see rising pressure. So the two are very complementary in that way, and the analysis, the analytical approach, the principles that we apply can be transferred seamlessly between one and the other. So we're starting with Caterpillar. Stock ticker is CAT. And what I'm also going to do in this series, I will do some videos where we look at slower term time frames from an investing perspective, and we'll also look at other instruments such as indices and ETFs also. But starting with stocks, let's start with the 5-minute. This is Caterpillar, and this was yesterday's session. And just to refresh your memory about the VRSI, what we're looking for, several things that really give us those all-important clues as to whether a particular trend is going to continue, whether it's coming to an early end, whether we're in congestion, and so on and so forth. First of those is the fulcrum of 0, where we are crossing from bearish to bullish or bullish to bearish. And clearly that is a significant area because it gives us a hint, a clue that perhaps the trend is weakening and reversing, or we're moving into a congestion phase where we've got very low pressure. The second aspect of the indicator is where we're looking at color changes and also the strength of those colors. So we're looking at the darker red here for increased pressure, the strongest pressure of all. Where we get the knocked back color, the weaker color, then that is less pressure. We then have exactly the same principles with a bullish phase over here where we have darker blue, and we have a lighter blue for a weaker pressure. So that's the second aspect, is very much the color changes representing the pressure, whether we have strong pressure or weak pressure. And the third aspect of it is very much as we do with volume, we're looking at the height of the pressure bar itself. So where we have very tall pressure bars, then clearly that's signaling a lot of pressure. Where we have lower pressure bars, then clearly that is less pressure. So it is very much a 3-step process of analysis. We're looking at the fulcrum, we're looking at color change from dark to light, and we're looking at the size of the pressure bars themselves. So as you can see, very similar in the way we look at volume, where we're constantly judging volume according to the height of the volume bar itself. Is it higher than this one? What's the relationship with price? And we can also compare them across the session. So we can look at, for example, in the same way we do with volume, we can look at pressure bars here and say, well, how does that compare with the one over here? Yeah, it's pretty similar. So clearly we're seeing quite a lot of pressure here as well. And that is very much the way to approach the VRSI indicator. And of course, complementing it and very much underpinning it all is our traditional volume price analysis, which I'm not going to go into in great detail because I want to concentrate more on the indicator here. But as always, we don't use an indicator in isolation. We use it in multiple timeframes. And more importantly, we use everything with volume price analysis, which really confirms what is going on. So I've done a lot of videos on volume price analysis methodology and examples where we've looked at stocks and all sorts of things within the program as well. So I don't propose to do a great deal of VPA analysis, but that is how you would use it. And that's the reason I've split out the two of them. So very quickly, if we start with the 5-minute run through here, and really I've highlighted the main aspects of it, if you will. This is a nice move to the downside. You can see the pressure here is increasing. Why? Because not only has it gone to the darker red, orangey red, if you call it that, and but the bars themselves are also increasing. And then as that move comes to an end, the bar height starts to decline and the bar color starts to change. We get little punctuations here, but generally the height of the pressure bars is falling away. We move into a congestion phase. You can see how small the pressure bars are there. We get a little bit of color here, but generally speaking, it's not going very far. Then we move back up to the upside, little bit of bullish momentum coming in here, but see how quickly it weakens by the height of the pressure bar itself. We've gone light blue anyway, and they are dropping away very rapidly, and we come down onto the fulcrum line into this congestion phase, which remains there for a little bit, and then we start to move away. Then we get an increase in pressure. The bars are taller. The market is falling quite nicely. And what's interesting here, this concept here of, which I mentioned in the introduction, is what we're looking for is if a trend is going to continue strongly, we want to see the pressure bars remaining roughly at the same sort of height. What we don't want to see is obviously things like this where it's falling away and telling you that that move is coming to a rapid end. You want to see the average, if we can call it that, but certainly the heights remaining pretty much the same or increasing even. So if we've got a market that's falling and we're seeing our pressure bars increasing, fantastic. Just like VPA, it's confirming that the move has got momentum. So it's moving with momentum, it's moving with pressure. And if we were looking at this from a VPA example, we'd be doing a similar sort of analysis, looking for our volume to be rising with our spreads increasing as well as the price waterfall takes shape. So I hope you can see how many of the principles, the analytical principles, or it is the analytical principles really that we apply to VPA, apply in exactly the same way when we're using the VRSI indicator too. Here we are. This was yesterday. That was the day before. We have a little bit of a bearish fall here. The pressure bars are increasing, but then we change to a color. The height diminishes quite dramatically, and as you can see, it's really not going too far. There's really no follow through there. Into congestion phase. In the congestion phases, you will see this a lot. Very small pressure bars, both to top and bottom. Nothing really to sustain any breakout there, and of course, you'll be looking at the volume as well. And then we start to see this late in the day reversal take shape. We see our pressure bars are increasing. They've gone to a darker color, so we know it's a positive move with some momentum behind it, if you like. And they're also maintaining that same height there. So we can be pretty assured that this trend, it has actually got some legs, as we say. It is going to move. And then we move to the end of the session, right at the close of the day. So that's the 3 timeframes on Caterpillar, and let's just have a quick run through all the others. Next one we went to was Honeywell, which is HON. There we go. And I've got these all linked both in terms of the instrument and also the time frame. So they've just uploaded and automatically. And these are just, if you don't use these, they are fantastic. There's not that, the only problem I find with them is there aren't that many of them. You don't have a huge number to choose from, but they are extremely useful for linking charts together, either from a time perspective or from an instrument perspective. Makes it very quick to move from one to another. This is Honeywell. Let's start off on the 5-minute. Let's see what we've got here. And I haven't really studied these. I'm just looking at them for the first time, really, as of this particular recording. Nice move here, rising pressure bars as the bearish phase takes hold. So we can be comfortable that that is going to move at the very least. It then reverses quite quickly and we go back up to the fulcrum line. Then we get the bullish phase taking hold. So we have a nice little rise here. And you can see how the height of the bars really gives us that strong clue. They're nice dark blue, so we know there's some decent pressure there, helping to push the price up. We get further pressure here, pushing it up again. And then we move into a congestion phase, which we would see anyway by virtue of the fact that we're very familiar with support and resistance and prices moving sideways in congestion. And you can see how the pressure diminishes right the way through that phase down onto the fulcrum. And then we get this nice price waterfall reversal. And when you get these little reversals in those price waterfalls, price is falling, and then we see a little pause point and an effort to rally. Even in the effort to rally, all that really happens is the pressure weakens a little bit, but it certainly doesn't go back to bullish. It just weakens a little bit. The height of the bars falls away a little bit, and then the pressure is picked up again and indeed increases on that one. And that one is pretty much the same. So again, it's just confirming that we're pretty much at the same level. Even down here, it's still pretty bearish, and then it starts to diminish as we get towards the end of the session, and we get a little further punctuation of momentum here as well. But as I say, even when we see little rallies, you're never going to see a move that's one candle after another in a downtrend or indeed in an uptrend. There are always going to be pause points, pullbacks, reversals, everything that is part and parcel of a trend. But even here, we don't move above the fulcrum. We still remain below the fulcrum. That's not enough pressure to reverse the trend lower, and it just carries on with a little bit further to go towards the end of the session. So that was on 5. Let's have a look at it on 10. There we go. So this is the start of the session here. You can see the height of the bar there, and then we very quickly reverse into the rally to reverse that bearish phase. But it's really not going too far. And then we come down into this nice trend lower, rising pressure bars here, nice and tall. So it's really confirming that we've got some decent bearish momentum there. And then we tail off towards the end of the session. So it doesn't matter what time frame you're applying this to, the principles are exactly the same. And of course, using it again in multiple time frames like this, we have obviously the VPA below, and we've got the VRSI above. And we've got all that information from the slower time frames, really giving us clues to what is going on if we're on the faster time frames. And you can run this on any time frame. I've gone 5, 10, 15 here, but you could be on anything 1, 2, 3, 1, 3, 5, whatever is your preferred setup for intraday trading, scalping, whatever it may be. The principles here are identical. And really just confirming what we've seen in the other time frames with the nice rally lower here on rising pressure into this session, and it really doesn't diminish very much either. As you can see here, the height of these bars, although smaller, although lower than the previous ones and changed in color, they do obviously signal at a slight weakening in the pressure, but they're not at the stage where they're signaling a reversal to a trend to the upside. We're well below the fulcrum point here. So that was on Honeywell. The next one is, there we go, on Apple. Wasn't a good day for Apple yesterday. Apple stock was well down, as you can see, and instantly it tells you pretty much the story of the day. We've got bright red everywhere across the screen, and of course that will be signaled with VPA analysis as well. Just have a look at the 5-minute here. It started off, and what's interesting about the day yesterday, as you can see, we opened gap down, no surprise, very bearish. big red candles, dark red. But then we go into the congestion phase, and this is a very nice example. And I think I showed you one in the introductory video, which was, I can't remember which stock it was. I think it was Caterpillar actually on the day. And this is an example of how the pressure diminishes as we move into the congestion phase. So we start very heavily gap down, no great surprise, and then it just meanders away very quietly down to the fulcrum. We get a bit of a continuation towards the end of the day, but of course, as with volume, what you have to remember is that when we look at these pressure bars, when we have a big pressure bar like this, we're looking at the same session here. Remember, this is the start of the session, this is the end of the session. And what you also have to remember and bear in mind is that where we have a tall pressure bar like this, when we get into another phase of the price action, this is going to squash these bars down because it's been so heavy here that the subsequent bars that form part of the same session will be compressed. This is very much like an index in Globex, where in Globex the volume is very descriptive. You can see all the highs and lows, but as soon as the cash market opens alongside volume, we get this huge inrush of volume, and of course everything that's gone before is compressed. So to help there, if we just move those out of the way and just squeeze them over, just there we are, move that over there a little bit. Right. Now what we've done is I've removed all the earlier bars, and can you see how as I take them off the screen, we now get much more demonstrable pressure, whereas before you might have looked at it and thought, well, that's very small. Why is it small? Well, it's small because of the pressure, the size of the pressure bar. So if I do that all the time, you'll see now we're back to where we started. We've got this very tall pressure bar at the start. Why? Because we had a huge gap down at the open. It dropped something like, wasn't quite $10, but it was getting on for that way, I think about 8 or something, 8 or 9. So if we just slide that out of the way and bring the rest of the chart into focus, now you can start to see and really analyze this from an intraday perspective, and you can start to see how tall this particular pressure bar is. Whereas before it looked quite small, well, it isn't small, it's large. It was just being distorted by the size of the pressure bar at the open of the day. So here you can see very nice size here as well, really just confirming it again and again, rising. So we've got rising pressure here as well. We come to this little pause point here. The color changes to a lighter color, which is what we expect. Doesn't get anywhere near the fulcrum point at all. It's just telling us that this is potentially a reversal from bearish to bullish. It could be. It's also telling us that certainly, yes, pressure is weakening. We are seeing, and certainly the bearish pressure is weakening. We are seeing a potential reversal, possibly a minor pullback, which is what it actually transpires to be, because as we get to this next one, we go back into dark red again and rising a larger pressure bar on the following candle as well. And indeed, these two are equally of the same height and more. And finally, we get down to the last one here, which is back to a very high candle, a very high bar, mirroring these ones earlier in the session, a couple of hours earlier, as we come to the close of the day for Apple. So a little trick there just to be aware of. It's very easy to do in Ninja. You just left click, hold and drag on the axis at the bottom, on the time axis, and that will scale it out for you and give you a much better perspective on what it is you're looking at in terms of the size of the pressure bars. And you do the same with volume as well. We do it all the time. We're just constantly scaling in and out. Similar sort of process here. Again, if you scale this out, these will be much, much taller and will tell you the significance of this move as the bearish pressure takes hold and we come out of the congestion phase. And of course, as you're breaking away from one of these congestion phases, wonderful trading opportunity because you've got the floor of support very, very clearly defined. And provided you see volume rising and good volume on the breakout, and it's not a fake out, happy days. Really, really easy way to trade because you've also got a very, very well-defined area of resistance to place overhead here and place your stops. Trading from congestion is just very classical, provided you have one thing, and that's patience. If you can be patient and wait for the breakout to come, it will come. It has to, because no stock, no commodity, no future, no currency, nothing can stay in congestion forever. And all you need is patience. And the reason it gets a bad rep is that those traders who don't use volume to confirm whether the breakaway is genuine or false. We use volume, so we always know whether it's genuine or not. If it's genuine, great, you jump in and you have a very, very clearly defined area to place your stop behind this very strong barrier of price, which acts as resistance in any minor pullback, because price often does come back and retest congestion phases quite frequently. Happens all the time. Sorry, I digress. Back to the 15-minute, there we are, and a very similar picture there. This big surge at the beginning, the attenuation is lovely. We go into the congestion, and then we get the pickup at the end of the day. And if you scale it right out, you'll see how significant those levels were. So that was on Apple. The next one is another stock which I'm sure you're familiar with, which is Amazon, of course. There we go. That's on the 5-minute. Let's start with the 5-minute. Let's just, yes, there we go. Sorry about that. There, and again, it really reinforces this aspect of the scaling factor, if you like. We had a nice open, gapped up open, lots of pressure coming in to support that move. And whilst it does rise, we go into the lighter color. But all the time, and this is something you will see a lot with the VRSI, is this trend, whilst it's a nice trend and you could certainly make money on it, it's not particularly strong because first of all, because the color has changed, and secondly, because the pressure is constantly waning the further we move along the timeline. So this is not a strong trend. It is a trend, and it is being supported by the pressure because it hasn't gone below the fulcrum point, but it's just attenuating the whole time as we move into this extended congestion phase. And then, of course, at the other end of the scale, where we get to the other end of the day, we've got this bearish trend developing as we come out of that congestion phase. And again, we need to scale that out and scale it back and scale it back. And there we are. Now we have a clear picture of what's going on. Really nice trend lower, nice pressure bars, lots of dark red here, so really confirming. And we even had a little punctuation of blue here, but it really didn't go very far. And we had a 2-bar reversal there, so that would have given us a strong hint that the chances are it really was a weak effort to rally. And of course, we'd look at the volume as well to confirm that. And then really nice example here. And this really reinforces the point I was making about the relationship between volume price analysis and the VRSI indicator, because this is a 4-candle trend to the downside. And what do we see with it? We see rising pressure bars. So we've got rising pressure bars, falling price, which is great. And if that was mirrored with rising volume, fantastic, happy days. So it's a very, very simple principle. This is volume and price in agreement, if you like. And we are looking at price and pressure in agreement. So the principles that we apply and we take from volume price analysis are almost identical in the way we look at the analysis of the pressure bars. And that's just a super little example there. So when we see falling price and rising pressure bars, happy days. And equally, if we see rising price and rising pressure bars, which is what we want to see in an uptrend, exactly the same, happy days. So let's just scale that back to where we were. There we go. Hop down. Forgotten which time frame that was. Was that? I think it was it 10 minutes? No, maybe not. There we are. We just pull that out. There we go. And it just really confirms the same sort of thing. Here we've got falling price and we've got rising pressure bars, and they are all bright red. So that's on 10-minute, and let's just have a quick look at 15-minute. Up we go. There we are. And they really, and what this also tells you when you look at it in multiple time frames, the trend here hasn't really established itself on 15-minute yet, because the pressure bars are very small, but they haven't crossed the zero line yet. And you might think, well, shouldn't they have done? And of course, what this comes back to is the whole business of the time frame, your chosen time frame, and how it relates to what you are trying to do in every trading in your trading window, if you like. If you're trading much slower time frames, then clearly the trend in 15-minute and 20-minute and 30-minute has not yet begun. Yet on the 5-minute and the 10-minute it has, and if we went down to the 1-minute, it would be very well established. So what the other aspect that I want to get across to you of using this indicator, just close that down a minute and scale that back to where it was, somewhere like that. The other aspect that you need to grasp with using the indicator is precisely the same way that we use indicators like the trend monitor and the trends. Trends start in your fastest time frame. Reversals and new trends begin in your fastest time frame, which is why we use multiple time frames. And the analogy, I'm sure you've heard it many, many times. If you're a regular with us or a student, you will have heard this many times. But the analogy we use is of throwing a pebble into the pond. The pebble lands, and the ripples from the pebble landing in the water, they ripple out. It's precisely the same here. If you're on a 5-minute chart, the trend, the bearish trend, is already established. On the 10-minute chart, it is starting to get established. On the 15-minute chart, it has yet to be established. That's a facet of trading or investing, whichever way you look at it. It comes down to your time frame, your time horizon. What are you looking at? And as I say, if we did this on a 1, 2, 3-minute scenario, that bearish trend at the end of the day would be very, very well established at a much earlier point. So it all depends on what your time horizon is, but you use the indicator, the VRSI indicator, in precisely the same way, because you will see the start of that bearish trend begin over here on 5. It then ripples through onto the 10-minute here for Amazon, and on the 15-minute, it has yet to begin. So again, it is a concept that is absolutely key to using the indicator, which is why I wanted to show you it being applied in multiple timeframes, because it is the other concept that is fundamental to its use. Using it in fundamental timeframes, in multiple timeframes, and the fundamental aspect of understanding how a trend develops. Every trend you can ever think of begins, if you go down to a 5-second chart, there will be a trend developing there of some description. Now, it may not transition into anything meaningful. It may die out before it even gets to 1 minute, in which case it's just a minor pullback or possibly even a couple of candles. But if it's going to develop into something meaningful, then it will move in lockstep across the time frames from 1 minute to 2 to 3 to 5 to 10 to 15, 20, 30, 40. And ultimately, it may well move out to the weeklies and the monthlies. You can think of it almost like I hesitate to use the term, but a tsunami that is, it's coming from an awful long way out, and it just has that relentless momentum to it. And that is what you will see if it is a longer term trend. And I can use the term longer term in any way I like. It can be applied to a 5-minute, a long term trend in a 5-minute chart might be half an hour. A longer term trend on a daily chart might be weeks and months. So long term is just a term to use. So that is what trend analysis is all about, and how trends develop. And this example is a very good one of looking at the 3 charts, the 5, the 10, and the 15, and really understanding that the trend has begun in 5, it's starting to begin in 10, but it has not yet started in 15. So I hope you've grasped that, because it is another key aspect of using this indicator. So that's on Amazon. Let's go to another one which I'm sure needs no introduction. which is Tesla, of course. Let's click on Tesla. There we go. Let's see what we've got going on Tesla. Let's click on 5. Okay, we had an initial ejection here of some bullish momentum, 2 nice big tall candles, but of course, even that price action on its own would have been sufficient to give you a pretty strong hint that that was really not going in very far. Bearish engulfed, weak candle, probably some high volume, given this is the start of the session, the physical session. So it probably didn't look as though it was going very far anyway. And then we move into a session which is really a nice oscillation session, which is showing you the importance of the fulcrum point at 0, and also, if you like, the balance between the strength of the pressure in the trend, because this one is developing nicely. We've got rising pressure here. We maintain that pressure pretty much throughout, and it only diminishes as we get towards the end of the session. But even here, it's staying pretty high. And again, these would only have been distorted by this, so these would be much taller. We could also compare it to the downwards pressure over here, which is higher than here because the bars are taller, but nevertheless, they're not far off that. So again, you're back to the comparative nature of pressure bars, which aligns with the comparative nature of volume bars, where we're looking at the comparative height to judge the strength of a particular bar or a particular volume bar. So again, really nice example. And we move up into this. Well, it's a very weak trend higher. It's not particularly strong. A little bit of injection there, but it's really not going very far. And the height of these is very low. So we know that comparatively, there's not a great deal of pressure in that upwards move. Over onto the 10-minute here. Just pull that over a little bit. That was the start. Really a 2-bar reversal, probably a ton of volume under there, so really not giving us not really difficult to infer what was going to happen there. Certainly some weakness here, not looking terribly strong. Minor rally, and then we get the nice reversal into our move lower. We get once again confirming the relationship or the close relationship with volume here in the way we analyze. We've got rising pressure bars and we've got a falling price. So what does that tell you? Tells you it's really confirming that this move is a genuine move and has some momentum to it. And then we level off here with, again, nice volume, nice pressure is really maintained throughout there, even though we do change color here with these minor attempts to rally out there. It's pretty solid. So that was on 10 and down onto 15. And that's the complete picture there, really. And you've got, like, once again, we've got rising pressure bars and pretty much consistent. And again, this really reinforces this aspect of multiple time frames, looking at things in slower time frames. How is that helping us in our faster time frames? What's going on? Really just confirming there that the bearish trend and the height of the pressure bars is really confirming all that. And I guess just dropping down onto the VPA, do some quick VPA analysis here. Here we are, we've got tons of volume going in here. Then we get the selling pressure coming in, so we know it's not going very far. Weakness here into the session, the mid-session part of the day. And then what do we see as this price waterfall develops? Well, we've got rising volume. So you can see how perfectly the two fit together, how the VRSI fits together with our VPA 101, our VPA methodology that we all know and love so much. It just tells the story, it speaks to us. And as we say on the book, read the book and then you can read the market, and really that's what it truly is about. Just a couple more very quickly. We've got Johnson & Johnson, which is J&J, which I did on the intro. There we go. Let's just very quickly rattle these up. This is on the 5-minute. We had a move to the upside, but the pressure bars are not huge, not terribly tall. So we're not expecting a great deal of momentum to follow through, and it just dwindles away back down onto the fulcrum. And then we get this extended period of congestion, which is absolutely fine. And of course, mirrored with volume, we'd see our volume very low. We'd see narrow price candles as we have here. So not really much going on. And then we start to get the breakaway and off we go to the races. and at the end of the day, it really, really delivers very nicely, rising bright red or dark orange, whichever you want to call it, rising pressure bars here, really confirming the bearish nature of the market at that point. So really, really nice to see that development. And of course, once again, to reinforce the point up here, if you're a breakaway trader or a breakout trader, fantastic. Be looking for under this candle, good volume under this candle on the breakout. You've got your platform of support, which then becomes resistance, and your stop loss could be up here somewhere well above this upper level. And you've got this massive congestion price in this region here to act as your protective barrier to your stop loss as the stock breaks away. Fantastic stuff. That's on 5. Let's jump on the 10. There we go on the 10. Very similar picture. You can see the weakness developing here in terms of the price candles. Nice 2-bar reversal there. Overlap one on the other, and you've got pretty much the same as that one. So it just confirms it. Very easy to do with 2 candles. Much more difficult with more than 2, which is why we use multiple time frames all the while. And we're into congestion, and then we come down into our lovely price waterfall, and all confirmed with our rising VRSI pressure bars. And we get punctuated with changes in color for sure, but the height of those pressure bars isn't falling away dramatically. We're not seeing something like that. It's just slackening off a little bit, and then we get back into the high pressure again. So it's really giving us confidence, and this is really what it's all about. Trading and investing is all about confidence, and the indicators give you that confidence. I've mentioned the trend monitor. It was another indicator that we developed because it gives you confidence to hold the trend. Because if you're confident, the worst thing that happens in trading, the hardest thing to do in trading, is once you've got some money in a trend, you've got some profit in the bank, you've already banked it mentally, and then the market starts to reverse against you, which it always does. And you're then flicked out emotionally, and you think, I'm going to close out, take my money. You take it off the table. Why? Because you're frightened of losing what you'd already mentally banked. So you close out, and then this happens. Bang, on down it goes, and you think, why didn't I stay in? And the reason you didn't stay in is because you got frightened emotionally, because that's what the market is designed to do. It is designed to frighten you emotionally into making emotional decisions, either to get in or to get out too early, to be trapped in volatile moves. So your fear of missing out, it's all of that emotion. And the market makers, they have got emotion down to a T, I can assure you. It is their most powerful, potent weapon that they use. So the VRSI is another indicator that really helps to manage that emotion when you've maybe jumped in here on a breakout, you've got some nice profit already. Maybe you're starting to see this and think, oh gosh, is the buying coming back into the market? We start to move sideways. Now you're starting to panic a bit. You're emotional. You start to see this rally and you think, I'm going to take my cash, I'm going to take my profit and run to the hills, which you do. And then, of course, you get the breakout from there and a further, much deeper move to the downside, which is hugely profitable. And this is the issue. We all suffer it. Let's be honest. I suffer it. Anna suffers it. We all suffer it. It's part and parcel of trading, investing. You just have to manage it as best you can. And these indicators will help you manage that emotion as well, as long as you use them in multiple time frames in the way I'm describing here. Up onto 15. There we are. That really encapsulates what I've been talking about on this particular stock. As I say, I haven't pre-prepared any of these. I just happened to choose them on the intro, and I thought it'd be nice to carry on through that dialogue on the 7 stocks that we looked at there. So these are the first time I've looked at these with the indicator on, just to explain to you what I see. And as you can see, it's falling away very nicely, and then it reverses into. So this is a classical example of a trend higher, weakening down to the fulcrum, and then the trend lower starts to kick in, and we see rising pressure right the way down into the close. We get a kickback here at the close, right at the close, but then that's part and parcel. And as I've explained on some of the videos when we were looking at the VWAP, the shape of the volume profile that you see in a session, that is very much the shape you see. You see a big surge in volume at the start. The session then settles down after maybe half an hour or so, and we get into the trading volume of the day. And then towards the last 10, 15, 20 minutes or so, you see that big upswing in volume at the end of the day as well. It's not parabolic, but it's got that sort of curve to it. So we start high, move into the session, and then end high as well. And you'll see that all the time. And you'll often see these kickback candles which come towards the end of the session too. So that's J&J, that was Johnson, and the last one is Wool Green Boots very quickly, which is WBA. There we go. And I won't do the joke that I did in the introductory video for you either. Just top that up. There we are, 5 minutes. Let's have a look at this one. Similar sorts of lessons here as well. We've got some punctuated here. We've got some rising pressure coming in here under this rally, but the rally is very short-lived. It's snuffed out almost instantly with this 2-bar reversal here, and we don't even get a color change here. We go straight back into bearish. Then we get a jump back into the bullish, but it's really, again, not going very far. And look at the height of the pressure bars. They're not very tall. It's telling you this is not really a terribly strong move. It's certainly not as strong as that. So the momentum here, the pressure here is not as great. And indeed, that's confirmed. We start to ebb away. We get another effort here, but it's really, look at the spreads of the candle. It's really not going very far. Then we start to see that attenuate quite quickly. And then we start to see a build up into a really strong bearish move to the downside. And of course, to add further into this, you would be looking at your indices, you'd be looking at your index futures, you'd be looking at the SPY, you would be looking at the stocks that constitute those indices, the big 5 or 6 that dominate and will drive that index. If they are moving south, if you studied the PDF online on the indices, you'll understand all about the constituents and how it is that within all these major indices, there are only a handful of stocks which govern whether the index will rise or fall. So we would have all that information up. We'd have the VIX up. We'd have our sentiment. We'd be looking at what's going on in currencies, be looking at the dollar. We'd be looking at what's happening in bonds, all the rest of it, yields, and we'd be putting all together. This is just one tiny aspect of a constituent, if you like, of what you would be looking at across the broad market. And again, lovely example. We've got rising pressure bars here as the trend gets underway and really takes up some strong momentum. And the strength of that trend is also represented in the strength of these bars down here as well. And then we get to the end of the session, and of course, it all quietens down as you would expect. Up onto 10. Let's have a look at that on 10. Then we are much the same, into a sort of congestion phase here, but then we start to break away below that level. Very, very nicely rising pressure bars right the way down to the bottom. And there's not a single flicker of a reversal there in the trend. There's no pause point, nothing, no green candles whatsoever. Straight down we go, and the same will be on 15. And of course, on 15, you get another perspective. Look at this candle here. You would have seen this on 15 minutes. I mean, is that strong? No, of course it's not. It's very, very weak. And you would be looking at the volume on that. We've got exactly the same here. Lots of weakness here. We've got a nice upthrust. We've got a doji, another doji, hardly going anywhere. You're building levels of resistance in here as well. You'll be looking at what's going on in the broad market anyhow. And then off we go. Nice cascading price waterfall. Down we go, up go the pressure bars, rising with it. Happy days. There we go. Apologies, rather a long video. Didn't mean to make it that long, but I think a lot of lessons to be learned there in using the indicator. And as I stress, it must be used with VPA. I haven't done a great deal of VPA analysis, but you can see from the chart layout, this is the way we use it. We have volume below, and I think it makes it clear. It's nice. A nice clear workspace with the volume split out from the indicator above, so indicator above and volume below. So just to confirm and just to summarize the key takeaway points from this, first of all, in terms of the VRSI itself, you always use it with VPA below. The fulcrum point is key, that crossover between bullish, bearish, bearish, bullish. Secondly, the color of the pressure bars. Are they dark? Are they light? Have they changed color? What is going on in terms of the color sequence? Thirdly, the height of the pressure bars not only in relation to one another, but how they relate to ones earlier in the session or later in the session. So always use that. And finally, use it across multiple time frames, where what you see in a slower time frame will give you a heads up as to what is going on in the faster time frame, and vice versa. So you will see that trend development start on your faster time frame, move across into your mid time frame, and out the other end into your slower time frame, if indeed it is a trend strong enough to develop in that way. So I hope you've enjoyed this particular video. Lots more to come. I'm going to do some on indices and futures and look at longer term timescales as well. So thanks for watching. See you soon, and bye for now.